Коллеги, добрый день. Очень рада вас видеть. Начинаем пресс-конференцию председателя Банка России Эльвиры Набиуллиной и заместителя председателя Алексея Заботкина. И вначале заявление по итогам заседания Совета директоров. Пожалуйста.
Добрый день. Сегодня мы приняли решение снизить ключевую ставку до 17% годовых.
Good afternoon. Today we have made the decision to cut the key rate to 17% per annum. Inflation has notably decreased since the beginning of the year, while external demand and economic activity growth has decelerated. Overall, this paves the way for cutting the key rate. Nevertheless, inflation expectations have remained heightened, the growth of corporate lending has sped up, while the uncertainty, including those with regard to fiscal policy decision, persists. In these conditions, we need to make our decisions cautiously, assessing further adjustment of monetary environment and the response on the part of the market. I would now dwell on the reasons behind our today's decision. Firstly, inflation. In August, the headline consumer price index traditionally declined, which was largely associated with the seasonal decrease in fruit and vegetable prices. Seasonally adjusted data show that price growth was approximately 4% in annualized terms. However, this doesn't mean that we have attained the target. The deceleration in August was to a great extent explained by one-off and volatile factors. For instance, fruit and vegetable prices declined more than normally during this season, which was because of the surge in the first half of the year. Hotel prices dropped more significantly than usual. The most volatile prices for foreign travel and a number of food products were also down. It is underlying inflation that we focus on, and its measurements have stayed in the range of 4 to 6% over recent months. The current monetary policy stance has ensured a significant decrease in underlying inflation since the beginning of the year. However, we will need time to solidify the disinflationary trend. This is critical when inflation expectations are elevated. They remain high and almost unchanged among all groups, households, businesses, and financial market participants. The double-digit indexation of utility rates could negatively affect people's expectations in August. Another possible factor was petrol prices, which is one of the core goods impacting households' expectations about future price growth. Fuel prices soared in the summer months. Given the government's measures to limit exports accompanied by the expansion of supply in the domestic market, we expect that the situation here will stabilize. Secondly, the economy. GDP dynamics in Q2 25 were slightly below our estimates, and output is still generally closer to the lower bound of our forecast for this year. Nevertheless, the sectors focusing on domestic demand have continued to expand, whereas export-oriented industries were rather contracting. This is the result of both lower prices in international commodity markets and the restrictions on Russian producers' access to some global markets. The vivid examples are the coal industry, oil production, and ferrous metallurgy. Companies in these industries faced a decline in revenues while their costs increased. Revenues dropped due to the reduction in external demand and global prices. As for their costs, they increased because of the sanctions and considerable growth in prices for materials, components, and labor, caused by the overheating of domestic demand over the previous 2 years. According to our assessment, the deterioration of external conditions was the main reason for the decline in financial results of many mining and quarrying enterprises. Higher interest expenses were an additional negative factor for highly leveraged companies, but its impact was much weaker than the adverse effects of external market conditions. Domestic demand generally continues to expand moderately. We expect that companies' investment will grow this year, although less significantly compared to the record highs of 23-24. Investment demand remains uneven across industries and regions. The monitoring of businesses shows that the manufacturing industry is the leader in terms of the growth rate of investment. Contrastingly, investment in the mining and quarrying sectors and construction has somewhat declined. This topic is covered in detail in the new issue of Regional Economy Report. Consumer demand growth accelerated in July-August. The sectors that were witnessing a decrease in sales over previous periods now see the first signs of a rebound. For example, the demand for passenger cars and housing is rising. The fast increase in households' income supports consumer demand. Unemployment stays at a record low. Nevertheless, a number of companies have shortened the working week. Today, these approaches are only applied by a few enterprises. We can understand the companies that prefer to retain employees after a long period of the labor deficit, being wary of recruitment difficulties in the future. It is important that these measures should not hamper workforce movement to enterprises that need to meet high demand for their products or hinder the reallocation of manpower across regions and industries. Such reallocation will provide impetus to the expansion of output in general. Thirdly, monetary conditions. Interest rates in the economy have notably declined in recent months, adjusting to the earlier decisions on the key rate and market participants' expectations about its reduction in the future. Deposit rates have dropped more notably than loan rates. This is typical of the phase of monetary policy easing. Different interest rates adjust at a different pace, but we will ultimately see that the downward movements will be comparable. The reduction in interest rates has accelerated lending, especially in the corporate segment. Taking into account the statistics for July and high-frequency data for August, the increase in the loan portfolio is close to the upper bound of our forecast. If it continues to expand at the same pace, the growth rate of claims on the economy this year will exceed our forecast. Retail lending edged up in August as well, in both mortgage and unsecured lending. After a decline at the beginning of the year, the demand for car loans has been up over the past few months. Saving activity remains high, although deposit rates have dropped. Higher incomes encourage both high savings and consumption growth. We will continue to closely monitor the situation. Given the significant acceleration in lending, we will need to assess more thoroughly the extent to which monetary conditions contribute to further disinflation. Briefly, about external conditions. Export and import dynamics are close to last year's figures. However, the deteriorating external conditions might continue to exert pressure on export prices. The growth of imports has been more moderate amid tight monetary policy. The ruble has depreciated since the previous meeting. The weakening of the national currency is yet another evidence that monetary conditions have eased. I will now speak of risks. Pro-inflationary risks continue to prevail. They include inflation expectations that are still elevated, despite disinflation observed since the beginning of the year. The labor market still poses a significant risk, as its tightness might persist for a long time or even increase further. There are also risks associated with an excessive rise in lending. An important factor is demand from the government sector. Our baseline scenario assumes that government expenditures will have a disinflationary effect this year. However, this effect has not appeared so far. If the budget deficit exceeds the level predicted in our baseline scenario, we will have limited room for cutting the key rate. As for disinflationary risks, it is a more considerable weakening of domestic demand. Winding up, I would like to comment on our future decisions. As usual, when discussing our future decisions, we will take into account information about the economic situation, lending, and certainly inflation and inflation expectations. At our meeting in October, a lot will depend on the parameters of fiscal policy that will be ultimately proposed. Our policy is aimed at reaching the inflation target of 4% next year. This is essential to return to moderate interest rates and ensuring sustainable economic growth. Thank you for your attention. Thank you. Now, colleagues, your questions. Don't forget to introduce yourselves and identify agency. Masha, please, in the first row. Good afternoon. TASS Information Agency, Maria Stepanova. I have a traditional question. What were the options on the table that the board considered today when thinking about the changes in the key rate and whether it considered keeping it as it was? We reviewed two approaches during the board meeting, reducing the key rate by 1 percentage point, as well as keeping it further. Now, the arguments in favor of retaining it as it was, that the monetary conditions have considerably eased, and we need to assess the consequences of previously made decisions, and one shall certainly will need to receive additional information about what ultimately the fiscal policy would look like. Now, stay in the second row, please. Anastasia Saveleva, Interfax. What is the share in your today's decision over on the side of the fiscal factor? And do you see the risk that the disinflationary effect from this particular factor is not going to come true this year because very little time is left until the end of the year, and due to the fact that the deficit might be exceeded and it might turn out to be above the planned level at 1.7% of the GDP? And did you consider in your today's decision the recent ruble exchange rate dynamics? Can one talk about the changing trend, I mean, the starting of the depreciation cycle? Our today's decision reflects our awareness. I mean, based on the currently available data, the awareness of what the budget for the end of the 25 will look like and its parameters for 26, 27, and 28, we act on an assumption that the annual budget is going to be disinflationary, but to which extent it will be additionally specified once the amendments are going to be introduced into the current year's budget, because the Minister of Finance already stated that borrowings in 2025 might turn out to be larger than the fiscal policy law currently contains. We expect that the quantitative figures the government will make available until the end of September, and we shall include them into our forecast that we are going to consider during the October board meeting. But the budgetary factor always constitutes an important point as overall predictability of the budget policy. As far as the exchange rate dynamics is concerned, we always take it into account because that serves as an important indicator of the toughness of the monetary policy, as well as the basic indicator through which changes in the external conditions impact inflation. When the monetary policy is aimed at a low inflation, there being any self-sustainable soft exchange rate support cannot take place. Fluctuations take place. They are inevitable when economic environment changes. And of course, we analyze all these factors when making our decisions. Thank you. The next question comes online. Sofia Komarov from Alta Press, the city of Barnaul. The agricultural sector is the key industry for Altai region. Currently, all of our processing industries are facing difficulties because of various costs like logistics, fuel and lubricants and parts, as well as the heads of the available cattle. It turns out that we have to basically fight the circumstances that have been produced by the state of the industry and various measures that are not giving us any easement. Where is the way out of this catch-22? Could you please tell us about the measures that have already been undertaken to help the agrarians and the agricultural sector? Well, actually, there's no trap. There's no catch-22. The growing costs that the farmers are suffering from exactly represent inflation that we're fighting against, and the recent data shows that they are us raising the rate that works because inflation goes down. Why does it happen? Because seemingly businesses' cost to pay interest on previously taken loans should grow when the rates grow higher. Indeed, that is the case, and that should speed up the price growth. But the fact of the matter is that the interest costs usually constitute a small part of the product cost. Their growth doesn't change anything. But the lion's share of expenditures in the very same farming industry takes place for parts, animals, petrols and lubricants, and higher end rates do slow down the cost growth for these resources, because speedy price growth for these resources is exactly the inflation that businesses face. By bringing down inflation, we help the manufacturing sector in the economy to solve the problem of the chronic cost growth. Now, about the availability of lending. Clearly, dramatic resolution of this problem is possible only against a stable, low inflation. We all understand that moving towards low inflation and moderate interest rates is not an overnight something, particularly when the inflation is growing. You are absolutely correct that there are industries that cannot wait, because when there is a sowing season or mowing season, farmers need money right here and now, and so that consumers can enjoy food on their table every day. And the government takes this into account. Definitely, there are subsidized lending available to the farmers, and actually, lending to the industry has been growing because the credits to the farming industry during the 7 months of this year grew by 2.5%. Now, in your specific region, I've taken a look here because the question had been submitted in writing. There is also the Ministry of Agriculture program in place, and actually the limits of lending this year have grown double compared to the previous one. So there is a very substantive support during the first 4 months of this year. 70% of the loans in the Altai regions were made available specifically according to the subsidized programs. The rates have grown a little bit. Currently, on average, they're in between 7 to 12.5%, which is below the market rates. Also, in the Altai region, there is a subsidized leasing program, as well as the subsidization of the acquisition of the domestically manufactured farming equipment. You mentioned upgrading of manufacturing and farming. It is very important if we think about tomorrow. Let me remind you that the main source of investments is not loans, but businesses' own money. Revenue and profit and shareholder investments. And here one must state that agriculture, despite all of the difficulties and challenges, is a profit maker. During the first half year this year, it was 315 billion ruble, but over the 12 months, if we look at the carry forward from July last year to July this year, it's 650 billion ruble. So this is a real financial results, the one that I should comment after all the interest on loans has been paid. So if you take a look at the Altai regional statistic in the first half of this year, 80% of all of the farming companies demonstrated profits. And of course, every important source of development, long-term loans, but here I should repeat that loans shall remain available, particularly long-term loans, only as long inflation is stably low, but we will definitely be there. Thank you very much. Sergey, please, in the second row. Thank you. Sergei Bolotov, Russian Gazette. Here you mentioned the growing lending. Please, could you tell us whether better mortgage conditions might come around and eventually to the new spiral in the No, it won't happen because we are acting very cautiously and we're reducing the rate as along with the decelerating inflation. So the mortgage will expand also gradually. Well, a certain moderate price growth may happen, but of the one which occurred when we had this en masse, non-customized, non-individualized lending, because the real estate supply couldn't keep up the pace with the demand. We do see that the real estate supply is growing. The housing, specifically, many housing projects are being commissioned into operation. At the same time, I would like to mention the following thing, because we hear some saying that the unsold housing is really piling up, even in the buildings and already commissioned houses. About a quarter, 70% of those who are currently being built, despite these fluctuations that has been around for several years. So the housing supply is there. So we don't expect the prices really to start spiraling. A very short additional comment, and the reduction of the key rate and the general level of the interest rates in the economy is not going only to affect the available mortgage, but also the available funding for the developers. And as a consequence, they will develop and build more housing. Colleagues, please. Artyom. Good afternoon. Artyom Govoron, Invest Future Agency. I've got two questions. The first one is many business representatives recently have been saying or talking about the kind of interest rates level that might bring our economy back to the growth path. Which one do you believe it should be? Do we need any growth because we're talking about a bit of a gap or very active growth during the past 2 years? And to follow up, what kind of the interest rate level will revive the stock market and make it growth? And how close are we going to be to the presidential decree to institute the better capitalization of the stock market? Well, firstly, about which kind of the key rate level will revive the growth. I must note that our economy this year and next year, I mean, this year it continues, but next year it shall continue to grow based on our estimates, be it at a slower pace compared to the previous 2 years, because coming out of the overheating period cannot have been any other way. But moreover, the stronger is the overheating, the more notable is going to be the slowdown in the economic activity. We've always used to say it, and I would like to underscore it yet again. Now, when the growth is going to accelerate, we believe when the potential is going to catch up with the demand, when we're ultimately going to be out of the woods in terms of the overheating, the demand and supply are going to grow together in a stable way. As far as inflation is concerned, that would mean a stable return to the 4% target, or very close to it. But in terms of the rates, because you asked about the rates, this is going back to the neutral range. And this neutral range is one that we see currently at 7.5% to 8%. 8.5%, 7.5% to 8%. But the reasons behind the acceleration of growth, I would like to mention. It is correct not to calculate the decline in the rates, but the fact that the economy is coming back to a balanced state, whereas demand is no longer overhanging above the manufacturing capacity. Now, what is going to happen time-wise, based on our baseline forecast, that should happen by the beginning of 2027. Now, if one may attempt right now to push growth before the demand even supply, I mean the goods and services and manufacturing, effectively, inflation not simply is going to remain high, it is going to accelerate. It's a delusion that you may keep it intact at a certain high level, and so in the end of the day it is going to deal a blow to the stable growth. So we're very resolute to achieve the decline of inflation down to a stable low level. Now, as regards the second part of your question, which is the stock market growth, yes, the stock assessment evaluation depends upon the level of rates. Against more moderate rates, if we consider the same level of profit making, and the shares prices will grow. But it is important to underscore that it is being defined not by the key rate, by the long-term rates. First and foremost, you make a reference to the federal bonds yield for 5 to 10 years maturity. And I must say that the long-term rate yield does not depend as much on the key rate, but upon the expectation of the future inflation. That is why we're always talking about the inflation expectations and amongst the stock market participants as well. So for that, you need lower inflation. But an even more important factor for a stable growth in stock market capitalization and to achieve the tasks set by the President is a stable profit growth and dividend growth. High efficiency in reinvesting of undistributed profit, but not least as important is shareholders being confident that when they buy stock today, they will be fully entitled to enjoy dividends in the future. So the aggregation of these two factors, high yield on capital, profitability and revenue making, and the fact that the interests of the shareholders, their proprietary rights are being observed in full, I believe this is much more important for a longer term growth of the stock market than the level of interest rates. Thank you. The next question comes from the city of Abakan. Viktor Lebedev, Hakassia newspaper. Please, Viktor. Good afternoon, dear colleagues. Well, the question is as follows. We are seeing a very stable trend in terms of the government spending over the past 3 years have been growing at 20%. And so when seeing this trend sustained, would it be realistic for the key rate to remain at 4% next year? I mean, this is a bit of a declaration that the central bank is making. Is it going to be real? You mean inflation inflation 4%? Oh, right, yes, of course. Well, it's a very good question, I must say. We are intending to achieve the proper inflation in any case, but of course, in the fiscal policy part of it, it all depends upon the kind of rates that are out there. And it is not the growth of the spending level is important as much as the budget, because if the spending that the government requires are covered by the collected taxes, that would be neutral for the inflation and the interest rates, because that does not generate additional demand. But if additional spending is not covered by taxes and the budget deficit is growing, then the budget contribution into the aggregate demand is also growing. So in order to achieve the very same 4%, you will have to lower the credit, and that would mean that the rates should be higher. I mean, the central bank is going to achieve 4% inflation level, but with higher rates if the deficit is going to be bigger and with the less amounts of lending made available to the private sector in the economy. Effectively, that works as corresponding vessels. The more money the economy gets on the fiscal side, the less then there will be on the side of the lending to the private sector and the businesses, and the other way around. Colleagues, please. Elena Fabrichna, Reuters. The experts are saying that they observe in the economy a certain technical stagnation. That's the kind of wording they use. And even in the central bank review, what trends are telling us, one of the charts was showing that the GDP has been going down quarter to quarter. So how would you describe the current state of the economy? And the follow-up question, at today's board meetings, has the Minister of Finance shared with you preliminary assessment of the deficit, or they didn't? Let me begin with the second part, a shorter one. I can't say it is simpler, but it's definitely shorter. We are participating in discussions with the government, fiscal policy trends, but certainly the final decisions are going to be announced by the government. But in our baseline forecast, we have always underscored it, our baseline forecast we do upon the declared parameters of the fiscal policy. But you also see that we always underscore the importance of the budget risk. When making our decisions, we rely upon our baseline forecast, but we do take into account different risks and the overall balance of the risk. And exactly today, the very same thing happened. Have you anything to say to this? Now, about the recession. Maybe I should start more on the theoretical side of things, although it is quite a practical point. Well, one of the common ways to think amongst macroeconomists is the considerable reduction in macroeconomic activity, not based on one particular indicator or an indicator of a certain specific industry, but the kind of indicators which embrace the bigger part of the economy. As a rule, they last for several quarters and manifest themselves in a broad range of indicators such as employment, real consumer incomes, in consumer demand, manufacturing, sales, a broad range of industries. And the technical recession is something that the commentators have an inclination to describe statistical registration of the decline of the real GDP over the past 2 quarters. But there are 2 real considerations. It would be erroneous to consider this a manifested recession if other indicators do not confirm it, because, like I said, there has to be a broad range of indicators. Second, the GDP data, particularly the quarterly data, the quarterly itemization, are susceptible to considerable reviews. And that is exactly why macroeconomists never bring down the economic assessment to GDP only, and they need to cast a very multifaceted look at the whole picture. Now, the third thing, the seasonal adjusted assessment of GDP are way different from each other. Let's look at our case. Indeed, during the first quarter, GDP went down after a very strong spike in Q4 last year. And based on our estimates that we're still going to fine-tune, we haven't come out yet with a detailed itemization of the GDP components, but again, based on our assessment, and some analysts also believe that in Q2, the seasonally adjusted GDP was above the one in the first quarter. So even, a statement of technical recession today is quite arguable. We indeed witness the cooling and the slowdown of the economic development when coming out of the overheating. It's when the manufacturing capacity has to catch up with the demand. We've been always telling it. It's like when in a race, the faster you're trying to run, the quicker is your heartbeat, and the more you will have to go in terms of distance at a slower pace in order to make sure that your heartbeat is tamed. That's why we're saying the bigger is the overheating, the more considerable the slowdown that may follow it. Yes, the situation is not uneven in between different industries. I've already said it here. In the industries which are export-oriented, there is a bigger kind of a contraction. And it is brought about by the contraction of the external demand and the prices for our exportable staples, but as well as continued structural shifts in the economy, because the economy is trying to orient itself more and more towards the domestic market. The reduction in employment in these industries, which are orienting themselves towards the external demand, against such structural changes does not manifest any recession. If we talk about the domestic recession, we consider seeing continuation of growth, although at a slower pace compared to the previous 2 years. And again, based on our estimates, the domestic demand in Q2 was higher than in Q1, seasonally adjusted. But if one to take a look at the first half year, this year, then the consumption of investments turned out to be much higher than in the second half in 2024, again seasonally adjusted. Now, in terms of what kind of indicators do we rely upon, we take a look at a broad range of them, including we monitor businesses and enterprises. We have a very broad list of the companies that we survey, and we share the data from this monitoring, and it's quite good that many analysts do use our information. We also rely upon the payment flow data via different systems, as well as the cash register data. So, based upon this operative data, what can you tell about the current, about the last 2 months? They're not the same, but put together, they do point to a high activity in consumption, and based on our assessment, we right now are witnessing moderate growth. Let me remind you that overall, throughout the whole year, we do expect the economy to be in growth within the framework of our forecast. The economy is slowing down within the framework of our expectations, but closer to the lower boundary. Thank you very much, dear colleagues. Please, Irina. Hello, Irina Akhmadulovna. Money Doesn't Sleep channel. Solid ruble, on the one hand, supports and stabilizes inflation expectations. On the other hand, the solid ruble, together with negative consequences and conditions, pressures the budget deficit and the expenditures from the liquid part of the National Welfare Fund. So I would like to hear your forecast in terms of the fiscal spending and the National Welfare Fund spending. Well, let me explain a little bit the way the fiscal rule works. A federal welfare fund, any shortage of collection of oil and gas revenues is being covered by the budget, which is the difference between the forecast and the actuals. Now, the factor from the appreciation of the exchange rate is not covered by the National Welfare Fund, so it doesn't affect it at all in terms of the differences in exchange rate. The government has an ability either to cover that deficit either by additional borrowings or by any remaining available funds. Additional deficit in the budget just makes a bigger contribution. We do assess the aggregate demand as well as the aggregate impact of the exchange rate effect upon the economy and the dynamics. But a more solid exchange rate definitely is at par with a stable inflation. The liquid part of the federal national welfare point should be relying upon the part of it which helps to support the stability of the fiscal system, because it is supposed to cover possible falling out oil and gas income against the extended unfavorable environment in the oil prices. Thank you very much. The next question comes online from the city of Yekaterinburg. Alexei Prokopiev from Informed Service Bank. The business lending is recovering. The growth rate of the portfolio, 1.1% per month in July, is very close to the indicators in 2024. Wouldn't that bring about an additional spike in the wages raise? You have correctly noted that the lending to the businesses over the past 2 months has been growing quite quickly. In the beginning of this year, the lending somewhat slowed down because of the tough monetary policy, as well as it was the reverse side of a more active funding of the government procurement via the budget system, and that reduced the needs of the part of the businesses in working capital funding. We do see that business lending really becoming much livelier, which is also the consequence of the fact that the monetary conditions are being eased. So far, it has been happening within the framework of what we're forecasted for 2025. But you are quite right that overall, throughout the year, the lending growth rate should come to a much more moderate and balanced level point compared to 23 and 24, when very high rates of growth of corporate lending were one of the reasons behind the excessive demand and very acute shortage of labor, because the companies couldn't regain their output because of the inflation becoming much stronger. And so we're pursuing the kind of the monetary policy which is aimed at lower inflation, and respectively, we shall, that would mean that in the labor market, since you asked about the payroll race, it means that in the labor market a very healthy balance is going to be between the productivity gains and the wages. Elvira, please, in the third row. Good afternoon, Elvira Nabiullina from RIA Novosti. Previously, on the fields of the Eastern Economic Forum, the president stated that the payment instruments between China and Russia could be exchanged. Could you please tell us what is the way that the central bank, as part of its monetary policy, assesses the development of the international payment systems impacting the stability of the payments in Russia, and how this cooperation is going to be done? Well, we're not commenting on the details of such cooperation as a rule in the area of international settlements, but generally I can say that despite external limitations, our banks and our companies are developing different alternative ways of payments, and that doesn't affect at all neither stability or the monetary policy. Varvara, in the row. Varvara Mikhalchova, Market Power. Based on the assessments of the central bank, would the translation of the depreciation of the ruble be translating it upon the consumer prices, or the disinflationary effect from this particular channel can be stated as done? We believe that it's already over. Maybe Mr. Zabotkin will say something. Well, it doesn't mean that inflation should accelerate. It only means that there is a greater role in the disinflation process is going to be played by other channels, because the transmission is the basic channel there is the lending. Going back to the previous question, in order to make sure that it works properly, the lending growth should be much more moderate compared to the previous years. Thank you. Next question online from Victoria Shirkina, Law and Finance Agency. Please. Yes, hello. The Minister of Construction in Russia states that up to 30% of developers may end up being in the risk zone. Now, to what extent the banking system is ready to face stress in the housing construction? And do you have any assessments of problem projects in the portfolio of the biggest banks? We haven't seen the kind of estimates that you are referring to. I cannot tell you what does this 3% mean. Is it in the share of the companies? I mean, the share of 30%, whether these are businesses or projects. We have different set of estimates. In terms of the banking estimates, in terms of potential projects being problematic, just 5% of their portfolio. The share hasn't changed compared to the beginning of the year. And by the way, it is very important here to take a look at the indicators which describe the way situation evolves in the industry. So if you consider housing sales in meterages, there's no decline at all if you compare with the periods which were not overheated before the mass mortgage situation was brought to an end. Because mortgages are growing, most of the developers remain profitable. Yes, the level of sales has gone down a little bit, but the coverage of the securitization of and escrow loans that is being made available to developers, yes, has declined, but not significantly, and that makes it possible to keep up the average rate of about 10.5% to the developers, which keeps them in the profitability-making area. We see that consumers in the new projects are becoming fewer, a little bit fewer. Of course, this is the general picture about the whole market. There may be individual projects which are not selling quite well. There could be some businesses which are over-leveraged. Some companies may delay commissioning their project into operation. So what do we see in such cases? We see that banks meet such developers halfway. They offer restructuring of loans as long as they see that housing may be coming to the market within a reasonable time, because the banks are interested in making sure that the buildings are finished, done, outfitted, people can move in. So if you talk about the quality of the banking portfolio overall, the share of the problematic loans, the ones which we attribute to the fourth or fifth category quality, is just under 1%, very minimal. So we don't see any need to work hard on the restructuring of the problematic debt and leverage. So that's the way we see the situation. Thank you. Dear colleagues, please. Jacob. Good afternoon. Jacob Timakov from the Expert publication. In the Regional Economy Report, the central bank states that the price expectations of businesses throughout the year have been going down because of the appreciation of the ruble. But because of the growing costs and actually very high rates of growth, the price expectations remained higher compared to 18-17, when inflation was close to the target. Now, the costs, as the report stated, are being pushed up because of the higher costs of materials and inputs. Doesn't the central bank have a concern that as long as the rate remains high, because we often hear from some economists that it doesn't make any sense to really plan anything above 12%, won't monetary factors start heating up inflation, and it's going to be a vicious circle? We don't have any concerns like that. On the contrary, high rate cools down the demand and consequently reduces inflation. But what you've described as non-monetary factors, in fact, this is something very much about the demand factors that we can impact through the key rate. The lion's share of the business's cost growth today, effectively, that is the very same inflation today that consumers are suffering from. The prices on the shop shelves representing the consumer inflation, but in the very same manner, when businesses buy parts, equipment, price growth is the very same inflation for them. The core reason behind the business's cost growth is the same as well, that the production development is not able to keep up with the growing demand. In order to produce more, companies start competing for the resources they need, inputs, materials, equipment. The fewer available resources are there, the faster prices for them growth. So this is the demand inflation rather than the cost inflation, which people like to call it. So it's the demand side of it. But in order to cool down the demand, we raised the interest key rate and we achieved the effect that we wanted. The gap between the demand and supply is narrowing. This can be observed via the current prices going down. So one can already gradually diminish the toughness of our policy. Nikita, please. Good afternoon, Mitrofanov Nikita, Economical Telegram Channel. To begin with, I would like to express my gratitude. Thank you very much for the new criteria for the qualified investors. Ultimately, brokers accepted my qualifications. My question is about the inflation expectation. In your press release, you stated that the inflation expectations remain at a higher level. Recently, ECB came out with a survey saying that the better is the solution. Your solution about the monetary policy is explained to the consumers, the better than the anchorage of this understanding amongst them. Does the Russian central bank run a similar kind of service? And if not, are you planning to do any additional work in the future to simplify the monetary policy framework for the understanding by non-professionals? This is a very important issue. You see that we're trying to act transparently and share the logic of what we do because we sincerely believe that the better people understand the rationale behind our decision-making, then people do comprehend the kind of policy that we pursue in order to reduce inflation. And that is why, considering the experience of other countries, the inflation expectations can be better anchored. Because if there's a temporary price spike, not necessarily one should run to the nearest shopping center and start hoarding because the central bank is going to fly off the hinges and allow inflation. But communication cannot replace the facts because people's inflation expectations form out of what they see on the price tags in the shops. And if it's an extended period of high inflation, then in order to anchor inflation expectations, you need a long period of stable, low inflation, like the case has been in other countries. In our case, this period wasn't a very long one, like 2017, 18, and 19. So based on historical markers, that was not a long period. And in the subsequent period of inflation growth, we were able to see that, to put it mildly, the inflation expectation has been well anchored, which is one of the factors behind the inertness of high inflation. We do monitor it and we follow inflation expectations very closely. Mr. Zabotkin, a couple of words about the surveying. In our series, we have the economic reports and a lot of information that we communicate out, and indeed to use some data to demonstrate that against a better awareness, the inflation expectations would be more anchored. We can do only after the inflation expectations are well anchored, because the points that may confirm it is something that we don't have in the data that we work with. Thank you. The next question comes online from Evgenia Pismina from Bloomberg. Evgenia, please. Yes, hello. I've got a very quick question. Could you please tell us what's your attitude towards a possible increase of taxes of next year, in as far as VAT is concerned, how that may affect inflation and the ability of the central bank to achieve the target? Well, we're not as much as having an attitude towards an increase of any specific taxes or taxes. When making decisions, it is important for us to understand how well balanced the budget is. Like I used to say, the lower is the budget deficit. I mean, if there is an additional spending, they should rather be covered by income rather than growing budget deficit. Because if the budget deficit grows to cover the necessary spending, against the higher deficit, the higher inflation is going to be. Thank you very much. Dear colleagues, Dmitry, over there. Dmitry Marko, Russia 24, the media started giving information that the Russians are trying to save more in the foreign currency and keep it in cash. Do you think it's true? And if it is the case, does it mean that there is a growing expectation of the of a future depreciation of the ruble? We cannot confirm that the Russians are trying to increase their foreign currency savings. Maybe it's all about not very correct data interpretation. If you measure currency assets in US dollars, you have to take into account that some of these assets people are saving not in US dollars, but in different currencies, like in yuans, and so on and so forth. So when US dollar depreciates, compared to these currencies, we will see that the value of the assets will grow in US dollars, although they are denominated in yuan, because we're looking at the US dollars. And exactly this thing is taking place this year because the US dollar in the global markets have weakened. We don't see that the people are switching from ruble savings into foreign currency savings. People are behaving in a very rational way. They make the most out of the high interest rates in order to save in rubles. Dear colleagues, please, Masha in the second row. Maria Filushina, Bitkogan channel. Twice you stated that the weakening of the ruble is the indicator of the easing of the monetary policy. It would be great to understand whether, as deemed by the central bank, the ruble is depreciating because of which reason, which is the main one. Exactly like we stated, that the recent exchange dynamics is the reflection of the monetary easing. Of course, not only that, because the external environment also brings about a certain impact, but the basic factor is the monetary easing. Mr. Zabotkin, would you say something? I would like to underscore that the kind of fluctuations that we're observing over the past 3 months have been taking place at a lower part of the range that the exchange rate remained over the past 2 years. So to say that something of a systemic nature in terms of the depreciation of the ruble is taking place is not worth it, because fluctuation taking place at the level of a very solid kind of exchange rate compared to the recent history. Thank you. The next question online comes from Andrei Pushkarov, the Russian Gazette, in the Primorsk region from Vladivostok. Amongst many tasks that the central bank is pursuing today, there is one to reduce demand generally. Allegedly, if the demand goes down, inflation will cool down. I believe this particular task contradicts all of the basic canons of the economy. Maybe except of the speculative one. When we're talking about the financial bubbles, we see that the demand for cars, the agricultural equipment has plummeted. Even people are buying fewer housing for themselves. Is it normal? This is the only thing that I read about in the book by a famous economist as a very poor case. You've cited examples that let's take a good look at it. Like you mentioned, the Entente is shrugged. Well, the changing in improvement in the mortgage market couldn't bring about a better indicator, because in the beginning of the year, the construction costs grew 10%, while the housing prices double %. As a result, the availability of housing didn't grow, even despite the individual income growth. And that is the kind of example which vividly demonstrates what attempts to artificially support the demand may lead without considering the sustainability processes. The decline in the demand for cars, this is something that happened after the spike in the end of last year, when before the utilization charge was introduced, the sales grew dramatically, and they have deflected some of the demand in the beginning of 2025. So the period of excessively high demand before the utility charge was introduced was borrowing from the future demand. But we do ascertain that the passenger car demand has revived itself. The dealerships demonstrate it because they have created some really long-term availability of the cars to be sold in the future. So average, since January 2025, sales in the passenger cars are higher than the monthly averages were in 2022 and 2023. So, once again, the balanced demand and supply are the key factors in order for products and services to be growing in a stable way. Thank you. Dear colleagues, Rita. Margarita Mordovina, RBK. In your comments about the results of the board meeting stated that the budget deficit growth will limit the possibility of the central bank to further ease the monetary policy. But you also mentioned that the regulators are not very much concerned for the budget deficit growth, but concerned with inability to follow the fiscal rule. What do you think? How strong are the risks that one will step away from the fiscal rule? Have you assessed this? Well, I must apologize, but I shall repeat what our approaches are. The baseline forecast, that is the foundation underneath the decision-making, includes the declared parameters declared by the government. But undoubtedly, when making a decision, we assess the kind of risks around the baseline forecast, the balance of risk, the aggregation of risk. And that is why we communicated out specifically. An important risk factor could be changes in the fiscal parameters. So when making up our mind, we are debating it. We are taking it into account. Mrs. Zabotkin, please. This kind of approach is not restricted to the budget prerequisites only. That goes for all of the prerequisites that are reflected in the baseline forecast. But beyond that, when making a decision, we definitely do take into account the probable way that the prerequisites may swerve towards. Natasha, please. Natalia Trushina, Moscow Komsomolets. My question is about the deposits because there are a lot of surveys, and I'm sure that the central bank runs its own, that the bank deposit rates are going down at an advancing and concerning rate. And so against that backdrop, there's a lot of speculation about the people needing to look for an alternative. And there are certain sectors which hope that people will take their deposits out, that they withdraw it, and they will take it and invest it into housing. The stock market hopes that it will see an inflow of deposits into the stock. Now, don't you think that such behavior by the banks may indeed see a mass withdrawal by depositors, let's say, if they would make it a little bit just over inflation, like 7%? So what will the central bank of Russia do in order to control this gradual reduction of the deposit rates? Or is it just the market should do what it needs to do? Thank you very much. We're very well aware that the deposit rates, in order to remain attractive, they have to compensate future inflation. And so making our decision about the key rate, we do it in such a way so that the deposit rates protect savings from inflation. And that is why we seriously monitor the banking and deposit dynamics, not only the banking deposits, lending interest rates and different types of lending mechanisms. And you can see that the short deposit rates usually do closely follow the key rate or the expectations of the way the key rate may evolve. But with respect to the long-term deposits, the interest rates currently are lower because they're being affected not only by the short-term expectation of the way the rates may fall, but also the general expectation of the rates going down all the way down to the neutral level in 2027. And so in this sense, the deposit rate decline looks quite explainable, because we see that people understand right now that current rates do compensate for their inflation expectations, even though they remain elevated, but the deposit rates do remain high, and we can see it through the deposit environment because the banks don't find it attractive without any justification to dramatically reduce the deposit rates because they compete for depositors. This is a good piece of their business. They don't want to lose them. And so they reduce their rates in a reasonable way following the inflation. We don't meddle in the bank's interest rate policy, that is the market thing, but we do monitor it and take it into account in our decision making. Mrs. Zabotkin, well, one should understand that there is a bit of a linkage in between the deposit and the interest rates. If people come to the banks and really, take loans at higher rates, they would definitely offer the higher rates for deposit because that's the way they fund it. Thank you very much. The next question comes online from Nizhny Novgorod. Ksenia Trusova, Volga 24 channel. Ksenia, please go ahead. Good afternoon. My question is about the mortgage market. It is known that not so recently the Russian parliament approved to allocate from the reserve fund more than 100 billion rubles to support subsidized mortgage programs in order not to allow for crisis in the construction industry and to support the declining demand. So the impression we get is that in as far as this part is concerned, the Minister of Finance and the parliamentary effort contradicts those undertaken by the central bank, which through its monetary policy is trying to cool down the market. And so due to that is my question. Do you somehow cooperate within the scope of the subsidized mortgage program with the Russian parliament and the Russian government? Because it is well known that in the past the central bank was not supportive of extending subsidized mortgage programs. Well, let's clarify that the 100 billion rubles that you're talking about, this is not expanding the program. This is truly an additional amount of money necessary from the budget to subsidize interest rates in relationship to the previously issued subsidized loans due to the fact that the rates went up. And yet again, it demonstrates that the scale of subsidized mortgage program may not only lead to higher prices which are above the going incomes of the households, but also do require considerable spending on the part of the budget if all of the risks with respect to the going rates are borne by the fiscal system, because that is a long-term fiscal obligation, you see. And that does characterize the scale of the problem. And that is exactly why we currently also believe that the subsidized mortgage programs, any subsidized programs that you offer to businesses, should be very well focused, very well customized. Otherwise, if there are so many different subsidized programs where the government is taking onto itself the whole risk in high interest rates, then the government will have to allocate considerable amount of money to compensate to the banks their spending, and that would distract resources from different social and priority areas of economic development. Of course, we are in a continuous interaction and interoperability with the Russian parliament and the government. On more than one occasion, we declared and made our position known with respect to the subsidized lending, and so we do see that currently the government is also focusing its subsidized programs first and foremost upon priority areas such as supporting specific categories of households and individuals and economic sectors, the ones that indeed require such support at this point in time. Any more questions left? Anna, please. Good afternoon, Anna Gromova. On finance program, I've got two quick questions. So after the changes in the law have come into effect, which is 161 federal law about the national payment system, households see now a situation whenever they wire money from account to account, the banks block them because they have to transfer information to the central bank, and the commercial banks are recommending that people should direct their questions to the central bank, all the way to the situations when an individual using the fast payment system, transfers money from his own account in one bank into another account in his bank, and so the money transfer is being blocked, and all the rest of the money that is retained in these accounts. Now the question is there plans that the central bank has to improve the process of monitoring doubtful transactions so that the law-abiding transfers are not ending up in limbo? And my second question, what is the position by the central bank with respect to the acquisition of new housing in installment? Because as you know, the law has been signed according to which the buyers will be able to buy goods on installments only for a short period of time to begin with, like 6 months and then 4 months, and there are people people started worrying whether it would be possible to buy houses and housing on installments. This is the instrument that they use very often. Now, about the transfer blocking. Yes, indeed, we are concerned because we witnessed the growing complaints about the unjustified blockages, and it is very important to take all measures into account and undertake all measures so that the completely law-abiding people do not suffer from such blockages. In our case, the blocking mechanisms, they kick into effect because of different pretexts, and we try to orient the bank that they shouldn't confuse this and should explain to people why something like that happens, and there should be an effective mechanism of contesting such, because money transfers can be blocked because of three reasons. When it is because of there is a suspicion that the fraud operation is taking place, then combating laundering money, and the third reason, violation of the tax legislation. So, speaking about the fraud as a reason, the bank is obliged to block a person's card only when data is received from this particular customer from the central bank's database, and this information has been uploaded there based on the law enforcement information. But any transaction can be done when you personally, in person, go to a bank's retail office in order to reduce the risk of the fraud. So this transaction can be done, but you have to go and in person visit the retail location. If there is a suspicion of laundering, that usually happens via the disconnection from the mobile bank. For the violation of the tax legislation, transactions on accounts are being stopped. Different mechanisms to contest such, like to lift a blockage, but there is a common part of it because an individual must get in touch with his or her bank. Let me remind you that recently we have issued an explanatory letter seeing the problem that people have to face so that people get clear explanation as to why the blockage happened and what people need to undertake in order to make such a blockage lifted. So we're currently monitoring the way these guidelines are being performed, but as a rule, the banks very quickly and properly respond to our guidelines. But generally speaking, we're certainly interested to make sure that all of the mechanisms that can be applied could help us to combat fraud, combat laundering. I'm sure that many people are interested in that because there are so many who suffered from fraudsters, and it is important to make sure that the law-abiding citizens are not subjected to it. So we're continuously improving data exchange with the banks. And by the way, we've got the same kind of an issue with transaction blockage. The medium-sized bank business, several years ago, you may recall, there were so many complaints. And our systemic response to that was we launched a KYC platform by the central bank. It was not one individual bank's platform. It was a platform for all of the banks. And we see that not so many individuals end up being in the red zone and very few errors occur. So we're thinking about following the same kind of an approach with respect to the ordinary citizens so that they don't suffer. But it's not something that will happen very quickly. With respect to the small businesses, we've been working together to establish such a platform. And so the tension was eased because of this. Now, your second question, sorry, yes. Payment on installments, very important as well. We're not against payment in installments, but there is a thing that is a concern. When using such installments, all of the rights and entitlements of a person buying an apartment should be protected. When the person goes to the bank and takes a mortgage loan, his rights and entitlements are protected at the legal level because there are so many norms. First of all, the bank must disclose a full cost of a loan. At the same time, this price that a consumer is to pay for an apartment is limited by law. In certain cases, a bank must provide a buyer with a grace period so that the consumer doesn't overpay. What is a payment in installments is almost like a loan. But at the same time, there are no guarantees that the person buying a house or an apartment is getting. It is being made available for a short period of time, 2 years, 3 years. So it's not long-term offering. And usually, the developers quite often are saying that, the interest rates are going to be falling, so go and take mortgage loan. But mortgage is not guaranteeing something. It's the bank that is going to issue a mortgage loan. And so an individual may have a feeling that right here and now he'll go and pay something, sign up for the installment contract, and he will then go and get a mortgage loan. What if it won't work out? So there is a big risk of not getting the housing you need and no money. But at the same time, the banks must monitor the debt burden, the leverage of an individual, so that an individual has the capacity to service the debt that he or she is taking on. We also need full transparency of information about the installment mechanism. So we also insist that this kind of information should be submitted to the Credit History Bureau, and the banks already have an established channel of interacting with such a bureau. The Bank of Russia is closely watching over this. So the installment payment mechanism is evolving, but at the same time, as we say, the citizens' rights and entitlements should be protected, otherwise we will face a lot of problems. Next question comes online from Kaliningrad, Nadezhda Budrima, Kaliningrad RBK. What are you thinking about the conclusion that some of the experts are saying about the long-term neutrality of money in Russia? A very good question. Thank you. Mr. Zabotkin will help me answer this. Thank you for such a great question. To make it short, we fully share the premise of the long-term neutrality of money. This is one of the most common results of the macroeconomic fair tightening, confirmed by multiple surveys which have been conducted since the end of 1960s, which was when we first heard about it. I guess one should explain what it means, long-term money neutrality. That is the statement, the fact that the changes in the money mass is capable of affecting the demand and the economic activity only within a short-term period. Now, what is a short-term period, as understood by the economists? That is about several quarters time frame. Now, beyond this time frame, the amount of money doesn't affect any real values such as labor productivity, GDP, which are being defined by structural economic indicators and the technological progress, the manufacturing organization, and against different amounts of money mass and different growth rates longer term. Not only the GDP rate growth is going to be different, but the level of prices. That is to say, how much inflation is going to accumulate throughout the same period of time. To make it even shorter and simpler, this is a statement of the fact that long-term growth is not possible to buy via money issuance. I guess your question comes from the fact that recently there was an article published by two economists from the Moscow State University, by Mr. Kartaev and Ernishin, titled "Long-Term Money Neutrality. Are we observing this in Russia?" Which demonstrates again that something which has been tested for decades by other economies is currently being confirmed by what is currently happening in the Russian economy, and so using it as one of the pretexts to make our decisions is the right thing to do. Dear colleagues, very short time left now, just for two questions. Natalia, over there, please. Natalia Kutovskaya, Pro-Finance Channel. Hello. The bond market in Russia is represented in a very big way. Investors put their money into it. There is also a place for primary placements described by large scale, but there are certain difficulties. In advance, one may not know when sales are going to start. It's impossible to define allocation. The liquidity of some of the issuance is limited. Issues is limited. My question is this: does the central bank plan to institute any regulatory changes in order to raise the level of transparency of this market? Because investors will find it easier to make up their minds, and the market itself, because of its greater transparency, will attract bigger demand. Thank you. Well, the bond market indeed is an important segment of the financial structure, financial market. It is developing actively exactly for that purpose throughout many years. Now, measures have been undertaken, and we do see that they generate good effect in the market, becomes very attractive. But what I would like to tell you is that the primary bond market is different from the primary stock market. You shouldn't make them equal to each other, because as opposed to the IPOs where placements, taking place within a very quick period of time. Overnight, bond placement may take several weeks until the whole issue is fully subscribed and sold. So, honestly speaking, we do not see any particular problems with the primary bond market. Liquidity in many issues is indeed limited. Yes, indeed. This is a question to discuss because of many other reasons. There are very small issues. There are issues with low credit rating, which means that investors will simply buy several bonds just to support them before maturity and to make them rated. And as a result, in the stock DAC, they could be supply and demand limited just to a few cases. The spreads there are quite large, and that deters trading activity. But we see that it doesn't really require the regulators to meddle with it. But you are quite right. With respect to small issues, investors may not know in advance when is going to be the first day that the trading may kick off. But whereas on the first day, let's say, an issue of a small placement doesn't see any kind of demand. There's no demand. Well, the start of the trading day, trading session may be delayed, but we don't see that this is any sort of a problem for investors, because nevertheless, bonds, as opposed to the stocks, because stocks are very often you buy in order to really quickly get rid of them the next day and just make a profit entry, because the bonds are more often bought in order to enjoy a coupon payment in several months' time. So even if there is any postponement, it's not really a big problem. So nevertheless, in order to make an investment decision with regard to bonds, to investor, it is important to research himself an issuer before spending money on buying bonds, and really follow the state of an issue before the bonds mature, because nobody is insured from the default risk. So investors need to understand that investing is not putting a deposit into the bank. So we are monitoring the process of primary bond placement, and there are two areas that we're currently thinking of. How to further improve this market. The first is about convertible bonds. This is the transitional form from debt papers into the share mutual papers. Yes, there's a bit of an overregulation of it, and so we will see what one can do about it. And the second of it, we do see the need in order to improve the mechanisms to improve the representation of the bond owners. To install certain requirements, reputational, institutional, but also to expand the ability on the part of the buyers to get access to information about the bond issues, so as to, get a better understanding of who and how they're going to be dealing with. Thank you very much, dear colleagues. Very interesting professional questions.